Alright, so we'll go with a similar format to last time. I'll just kind of run through most of the bullet points, have Sean handle some of it here. So as a few weeks ago here, you can see if I put this in the right order. Yeah, page 2 here is the trades that we executed during 2019. Excuse me. So,
Pass the old meeting minutes out first.
oh, I'm sorry.
We got the old meeting minutes here, if
Oh.
anybody hasn't looked at them. This is what. Ooh,
Thanks, Sean.
you looked at them already, Alan?
Yeah.
Here's a copy, Alan, it's a fresh one.
We can do them a minute.
There's any-
Better.
No, if you guys see anything like just let us know. We'll add it to the record. But this is from the last meeting on 9/23, so, or, no, 7/23.
Yeah, I would say this is a July meeting.
Yeah, it was in July.
Yeah.
Well, that's the first change that I say, change the minute days to 7/23.
Do you have a motion to approve them? I don't think so.
I don't know if you need that here.
No. Just an advisory board.
Yeah.
Alright, so as I started here, as of a couple weeks ago, everything that we had purchased that was still outstanding has matured, it's gone back into our accounts, so shows that our cash management was overly conservative, which is good. You never want to break one of these early, take the penalty on it, or potential market moves on it. You just want to get the interest rate that you're looking to get with this type of investing. Obviously, it would have been nicer to have a higher rate of return, but as everyone has seen, the Fed hasn't really been very helpful on that front this year. For anyone who's not aware of it, the Federal Open Market Committee is meeting today and tomorrow. They're basically, smart money is basically pricing in about a 93% chance of a decrease in rates. They're going to cut another 25 basis points. So as shown, yes, on page 2, you can see we made just under $375,000. On the year, it's a tiny bit less than we made last year. Most of that's due to the lower interest rates. We actually had more principal invested for longer periods of time in a lower number of trades. But just due to the lower interest rate, we made about $20,000 less. If you look at the third page of the handout, it's the same format as it was last time when I'm comparing treasuries to CDs. As you can see, rates have continued to drop since our last meeting, anywhere from 33 to 43 basis points when comparing an equal maturity and an equal vehicle from 1 year ago. You have a drop, that 33 to 43 is in treasuries, or 33, yeah, up to 1 year. When you compare just treasuries, we have a 53 to 80 basis point drop since we met 2 meetings ago. And CDs, over the course of those 2 meetings, have dropped over 1%. So we're kind of in uncharted territory here. So far this year, the Fed has cut rates twice, all indicators, as I said, pointing to a third cut tomorrow afternoon. Yeah, the futures market showed 93%, as I said. That said, though, not all Fed presidents are on board with this. There's 2 very vocal presidents, the Boston Fed President Rosengren and Kansas City President George, have actually been out on the news and have been quoted publicly saying that they don't support any further cuts. They don't think it's sustainable. That said, it's not a unanimous vote, it's a majority vote, so it most likely will go through. So, from what I'm seeing and stuff that I know from my past life here, if they do as expected and cut the rates, obviously it's going to limit our further income, our interest income even further. But it most likely will have a pretty positive impact on our sales tax. For those that don't know, sales tax accounts for approximately 40% of Albany County's revenues. So it is a very significant piece there. So kind of robbing one to take from the or to give to the other. Other main economic indicators here are all looking pretty good. Unemployment's basically at a 50-year low nationally. Nationwide, it's about 3.7%. New York's about 4.0. Along the lines with last meeting, economists are still predicting about a 2% annualized growth in real GDP. I think the last meeting, they were calling for 2.1%, so pretty much in line to that. The biggest growth to that also ties into the sales tax, because the biggest driver of the real GDP growth is consumer spending. Showing the fastest growth in 4 years, it's about 4%, 4.7% up year over year, and retail sales are up about 3.4% year over year. So hopefully the economy keeps chugging along, everybody keeps spending their money. Do you want to go into the budget for a little bit?
Yeah, sure.
Okay.
Not to bore guys at the end of the table that have already been looking hard at this, but our third quarter numbers are in. We're on track to making our budget this year. It actually looks a little bit better than it should, because they still have yet to take the $1 million in AIM payments that we discussed at the last meeting. It's coming to a real crux at this point, or a real congestion at this point, because some of the towns and villages are gonna start being due their payments by December 15th. So we have about 6 weeks for them to really start to figure out how they're going to handle this. We have not seen any signs yet of them withholding the AIM funding, so it could, the state kind of does what it wants to in this regard. It's OSC, it's not tax and finance, but still, this was supposed to start happening in June, and it's gonna be like a Band-Aid at this point. They're just gonna take the whole lump at once. So I think for next year, we're budgeted 3.5%. The state comptrollers weighed in, they're in the range of 3.3 to 3.8, depending on the area of, depending on the region that they're looking at for growth. So I think our number's pretty modest. It's right in the middle with, the comptroller's numbers, and, so I think cash-wise, and like I was describing earlier with the lull and the tax levy coming in early February, we really have to, as the board, we're gonna really take a good position in investing next year. I think we can do a lot better with our investing. We started late this year, and so getting into that first 3 months, we'll really be able to do well. Especially if we don't have another rate cut and it stays flat, Yep.
Yeah, so on that note, for those of you that don't know it, Sean kind of got into it, but historically, from now until the end of the year is basically our lowest point cash-wise. Under the previous administration, they actually had to take out tax anticipation notes for short-term borrowing to meet payroll, operating expenses for a couple of months at the end of the year until, as Sean said, in January, when your large influxes tend to come in between your property tax levy and your first quarter sales, or your fourth quarter sales tax from 2019, which will hit about the third week of January. Last several years, things have turned around. Our cash reserves have built up much stronger position, but that said, we're still not looking to do any investments between now and January, as Sean just alluded to. Still leaves us with more than enough cash to meet all of our projected needs with retirement, as Sean said, the AIM funding.
Plan on paying that early. We always budget for amortizing for retirement, just in case, because you don't want to fall short and say you're gonna pay it and then you can't pay it. Always better to be the other way.
Yeah.
Can't pay it, okay, we can pay it, we'll figure that out. So that's due December 15th. All things going and nothing, falling off the face of the earth, that we do plan on doing that, and that's about a $20 million expense. The percentage rate between paying it from December 15th and February 15th when it's due is like 18 to 20%. So it's a pretty good reason to pay it early if you can.
Yeah. And then one thing we're gonna try to get into next year is to have our big pieces that are out, sitting out there long term. Hopefully it'll be a rising interest rate environment, so you'll get a little better rate on the longer duration, but we also wanted to do some shorter term. Just kind of keep some small pieces rolling over, weekly or every couple of weeks. So we may not actively be touching it, but every Thursday or so, the bank might be calling Billy or I up and saying, hey, you guys rolling it again, you want to keep it out there. A little more bookkeeping for everybody, but it'll allow us to get a little tighter where we're not keeping as much cash sitting around, just making the money market return. Because as of right now, nothing's getting a great rate of return.
I think, since, I guess the next meeting will be, do you have anything more to add?
No, I'm good.
I think since the next meeting will probably take place in mid-January, if we could pass around some projections to the members of the board in the meantime, like probably late December-ish. Just so we have a plan when we get to sit down in January, so we have a plan for February. Because we really, if we take advantage of this, we could probably be investing like, 50, 60, if everything stays right. Some long term, some short term, you know what I mean, not just 50 for a year, somewhere around that range, and really maximize our returns on that. If everybody feels good.
Just out of curiosity, what are you using for longer term maturity? You still in the treasury arena with that, but just longer maturity?
Still looking at treasuries and CDs. I've talked around to a few guys. It might make sense to try some other government debt. Not necessarily just some U.S. Treasury, maybe mix in some New York State or, I don't want to go too small in a municipality because, as we've seen, sometimes that carries a little more risk than we really want to bite off. But it'd be nice to get a little diversification, and even if it's just to pick up something a little different, if we can grab something for a couple of months. The issue is that stuff's just not as actively traded in a lot of regards, whereas the treasuries are basically cash. They're fungible on a 24-hour notice if we need to. And they're more liquid than even the CDs. But we're gonna try to blend it up a little bit, try to increase our rates and, keep our risk as low as possible. If you guys have any suggestions on that front, if you see something come across, let me know.
Yeah, definitely. If you ever see something, have any questions, want to know if we can or cannot do this, always send the question over. And we'll run it through the policy, and then if we can't, we'll ask smart lawyer minds to make decisions for us. And go from there. But yeah, we'll try to get something out, like a positions towards the end of the year, and then be able to make some good long-term decisions in February, for February going on. But that's it. I mean, I really don't have it. We don't have any actions to take place, right?
No, we're just sitting right now.
That's where we stand.
Even if you can get the minutes out in advance, is that possible?
Yeah, sure. No, that's
Just a chance to review them before.
that's definitely something that we can do.
Good.
That way you can tell me the date's way off. And I just go right to the bulk. Does this sound like me? That sounds like me. Dave said that. That's about right.
I'm gonna call it one, too. All right. If anybody has anything else to add?
We do have a CD out there that matures on Friday for $8 million.
Okay.
The interest rates on our money market accounts is 1.17, which is better than CD rates.
Yeah, exactly. There's no point in rolling it.
Yeah. Like, we're not going to have any money to roll anyway.
Yep, we got some bills due. We got some bills coming.
Yeah. Going to be very little left in the general fund at the beginning of December. If my figures are right.
We've looked at it. We didn't see any. We didn't have any objection at looking at. We didn't see anything out of the ordinary if we paid the retirement earlier. Do you think there's an issue with that?
No. I would prefer to pay the retirement. We're going to save over $200,000.
Yes.
Which I'll show you my projection.
Okay.
Yeah, we can compare it to what Lou's showing us too.
They're estimates.
Yeah,
but
all you can.
they're, you know, I would say they're pretty close.
Yeah, yeah. Well, your big payments, like, you know, Medicaid every week's, you know, it's
Right.
gonna be 1.3 million, 1.4, whatever.
Payroll tracks pretty steadily.
Payroll's like, you know,
2.5.
2.5 the last week of the month. Because everybody's longevity gets paid the last week of the month, so.
Yeah. You know, there's some big expenses. There's debt on Friday of 6 million.
Yes.
Hudson-
We had that.
Hudson Valley is 4 million.
Another 4?
That goes out on Friday, I believe it's Friday.
Okay.
Other bits and pieces.
Okay. Yes, let's definitely sit down. I mean, it would not make sense for us not to make that's one of our best investments is paying that early.
No, I totally agree.
Everything else paying a percent right now.
Even if we're down to rock bottom, I'd still like to see it.
Yeah, it's, you know, it's like 18%, you know, APR.
It's too much to lose.
Definitely. If anybody has anything else, definitely ask it out and.
Sean, I know we discussed it last time, the idea that internet sales tax, the state isn't
Yes.
separating out the amount that we're getting in internet sales tax. Has there been any movement in terms of either from our state representatives or otherwise to kind of clarify that? Because that's really in the mind of a lot of our,
I can definitely understand that.
a lot of our people.
Yeah. The best estimate, I feel, that we
Yeah.
got was when the state broke down how much it was gonna be worth, and we apportioned that
Right.
number to Albany County, and we're somewhere in between 6 and 7 million,
Okay,
somewhere in that regard. To pinpoint it, and I don't know if you've ever looked at tax and finance or dealt with tax and finance. They basically are like, well, we give those values out, it is what it is.
right,
The problem is when something is an electronic sale, it goes into that category.
right,
But that's how people report. It's not how, if you're a mattress dealer and somebody buys a mattress online, that doesn't get reported in internet sales.
okay,
So it's that kind of thing that skews that number. Now, we have seen electronic sales go up. Did we see it go up 6 million and where we would get 6 million in sales tax?
Yeah.
No.
okay,
But it's a combination of those kind of things.
Sure. okay,
So I think the target I think the state said it was, God, I want to say 280 million, 140 million upstate, something like that.
Yeah.
And we prorated it
For the county.
We're 310,000
Yeah.
out of the. I
so
was like,
6 to
that's pretty
7
fair
million
because
is it? Yeah.
our CPI, you know, our basket of goods is around national average. We're
Right.
not like a high cost state, except maybe taxes,
Mm-hmm.
but goods and services are generally, you know, right in the median. You know, it's not a bargain place and it's not like Manhattan.
Right, right,
So judging off of that and the way the economy has been going, I think that that's a fair number. But to actually represent that from tax and finance,
sure. You can't do it. Okay,
can't do it. I hope they get better at it. I want to
Right.
see them get better at it.
sure,
Because they don't designate it to us in their payment or nothing. They just
Right,
say,
right.
this is your sales tax.
Okay.
These are your categories,
here's your category.
and there's your
Right.
4%, and here it is.
Figure it out.
Yeah,
And you can see electronic sales, e-commerce, it's a tag.
yeah,
But
Right.
a lot of those other sales
fall into
From-
that category.
fall into like whatever designation they are, like,
Right.
you know, manufactured goods, like if you're a clothing maker or something of that
Sure.
nature, you know, textiles.
If
It's
you
gonna
sell it
fall into
online, it goes on
textiles.
textiles.
They're gonna report it as textiles, they're not
Okay.
gonna report it as e-commerce.
Right, okay. Makes sense. I mean,
Somewhat,
for the state.
but I can
Yeah.
surely show you like,
Yeah,
I can
I
send
mean-
over like the last 2 or 3 quarters, just.
Yeah, I think that would be helpful for our guys to see.
Yeah. But that you're not gonna be able to back into the
Sure. Yeah,
But at least they can see it for themselves then.
yeah,
The
yeah,
actual-
absolutely.
all right. Anything else, gentlemen? I'll call it adjourned then.
Thank you.